What's up, guys? It's July 7th, 2025. Looks like we had a bit of a small pullback bear trend day. Trading range. We experienced the full market cycle today. It's pretty cool. We experienced it twice from just looking at it. First breakouts here, channel phase. So breakout, channel, somewhat of a trading range. Breaks out, channel. This one was a little bit more sideways, kind of a leg one, delayed pullback, leg two. Pretty cool day. Want to give a quick shout out to the members and subscribers. I'll be dropping more members videos this weekend, doing more trade breakdowns and things I've been working on, talking about trap traders and context entries and exits and why I'm doing what. So this is the weekly chart and this is the daily chart. Did we make a new high? Did we make a new? Yeah, we did make a new high. I didn't catch that last week. Oh, I guess because last week was a short week anyways. So getting bad fall through a new high. How many legs do we have up? Leg one, pull back, leg two, pull back, leg three. And just with a more recent price action the last 2 weeks, leg one, pull back, leg two, could become a second leg trap. There is a gap right here, so if I'm applying my setup to this time frame, I need to stay off Twitter. I've been on Twitter a lot, reading what traders say, and it's some interesting stuff, the information that's out there. And I was talking to someone on Twitter about fractal price action, and they were saying that to stay away from the 5-minute chart. So it piqued my interest because, we trade the 5-minute chart. Al built his whole, Al is like the price action godfather, built a whole course around the 5-minute chart. Ali, from what I understand, studies at least on the 5-minute chart. So I thought it was really interesting that this person was like, stay away from the 5-minute chart, blah, 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 blah. And, I said, well, that doesn't make sense. If you're saying what time frame is better than the other, price action is fractal. And that's what I'm doing here. This is the same setup. I trade on the 5-minute chart. We're just applying it on the weekly chart because price action is fractal. We know that through Al's lessons. We know that through 𝐦𝐨𝐬𝐿's lessons. It takes a while to just to kind of understand it, but once you just force yourself to apply the same principles on every time frame, it will work and it makes your life a lot easier. So if you guys are doing your breakdowns, try and study each time frame through the same lens, and then you can start to, your mind by itself will connect the time frames through I believe 𝐦𝐨𝐬𝐿 coined it, calling it the trader's imagination. It'll build itself together. So I see trap pairs down here. I know they're trapped because they try and go short here, and now they're facing more than a 1 hour loss. But we have 2 bull bars in a row. They're going to short higher. Their break-even price is right here. So what we want to see is a leg one, pull back. Bears just get out, barely at break-even. They buy back shorts and go. If bears start to reach the 50% mark and start to make money below down here, I know we're in a trading range and I have to rethink the trade. If bears can't get down to their break-even price and it goes up here, well, then we know they're still trapped and we're going to look for that second leg up anyways. So that's how I'm reading the weekly and the daily chart. The daily chart's a little bit more zoomed in. We can see the bars. Leg one, pull back, leg two, pull back, leg three. Bad follow through today, but there is a buyer. This is the first trend line break actually. I'm looking at I was looking at these numbers. I'm supposed to be looking at these numbers. Oh wait, yeah, these numbers were changing. So yeah, I'm looking at these numbers up here. I'm just looking to see if the lows are taken out real quick. Here it gets close. No, yeah. This is the first trend line break. So this is the first reverse after 8 bars on the daily chart. So it could be a better fade, but we're kind of extended away from the EMA, so we'll see what happens. Could go either way. Today's bear trend had a lot of bulls were making money. Bulls were getting 2-3 bars in a row, 2 bars in a row, 3 bars in a row. They made money here. They got a bull channel here. They got their leg one, leg two. Leg one, pull back, leg two. And then climactic bear leg, which also got a second leg down. Leg one, pull back, leg two. And then bulls made money at the end of the day. Bulls are making money in the overnight session. My schedule a little bit funny this week, so I'm not training too much, but by Wednesday, Thursday, Friday, I'll be back to normal, and then by the end of the month, I'll be working full time, so I won't be able to trade I'll trade on my phone, like 1 or 2 trades if I see a juicy setup. But I won't be able to be actively day trading the RT8 session because I really want to take the trade with me with Ali. So I'm saving up as much money as I can to just pay that off, and then I'll go back to part time and trade more. So saw this thing online. I'm a big fan of Alex Hormozi. I don't know how to say his last name, but like Alex and Layla Hormozi. They're business people. They do sales and blah blah blah. But I like some of the lessons they have. And one thing he said about becoming an expert is the quickest way to become an expert is to hang out with experts. So I heard that after I had made the decision to take trade with me with Ali, and now hearing that, it makes sense. The quickest way to become an expert is to hang out with an expert, and that just drives home the point that I really do want to take this class. So I am prioritizing a steady income right now because I need to get into that class ASAP Rocky style. So with that being said, I'm gonna do this breakdown and then get to it. I've been rambling. Oh wait, the numbers were wrong. So we have a gap down, followed through with bar 1, and then we see a bull channel, 4 bars in a row. Already, we know that bulls are trying to get the reversal, but it fails with 6 and 7. Where are we in the market cycle? We're channeling down. This is the breakout bar. This is the first opposite bar. This series of 4 bars, and bulls get 2 legs up. So leg 1, pull back leg 2, and then it sells off. Second leg trap into the bar 1 high. Bar 6 and 7, Shanta gets second leg. Bulls are now trapped on the high of 5, so they're going to scale in. If they scale in here, they almost get their break even, sells off, and you get a second leg 9. Bulls that missed this quick scale in on bar 7 still have an opportunity to get out break even, and they do with bars 10, 11, and 12. So they buy here, they buy more here, they possibly buy more here, and now their break even price is right around 50% pullback of this leg down from the high of 5 to the low of 10. Draw it out right there, because that's where the spike starts. That's where the bear trend. That's where the bear spike starts. This leg down. This is where the bear spike ends on the low of 10. 50% level is marked out, and we can see 12 rallied and sold off, and the 50%. The trade was met within. So if I had a limit order set there, it would have been reached within 2 bars, which is what I like to see. Now we know break even bulls are out the market. They sold here. Front running bears that sold bar 6 sold the pullback to press their winning position. Trap bulls are selling out, and now second leg traders, us, join the trade, and now we know there's more 3 types of traders selling. And look, the bull pressure dies down, 14, 15, 16, and then we get steady selling from 17 to 21. Remember, I don't talk about it often, but we had to think about, so there's 2 types of control. There's control over price and control over time, and this is a good example of control over time and price. Bears are controlling all the bars, and they're controlling the time for about 25 minutes. And bar 16 is a bear bar. It painted bullish, but it's a bear bar. So you could even say from 15 to 21. So bears are controlling the market from the last time bulls got out for about 35 minutes, trying to get second leg down. We know there's trap bulls on the high of 16 because it rallied from 14 to 16. Bulls are buying, hoping for this being a wedge bottom. And look again. Bulls buy here. They're buying all down here because we can see tails, but they're not able to get out at break even. Instead, they're getting a bigger losing position. Now we get down to support, 23 and 24, 25, bounces up, tags are 50%, sells off, and gets that flush down. This time it happened within 1, 2, 3, 4 bars. So we are trading over support, so it took a little bit longer. Bulls are trying to buy. Now we have a losing trade. I'm going to reference something I just talked about real quick. Remember right here I said if bears start to make money, we have to renegotiate the trade. Look here. So here we see a quick fill. Here we saw a quick fill and exit. Quick fill, target met. Quick fill, target met. I'm going to delete that, but you guys saw that. Now look at this specific trade. We're in the third leg down. Leg 1, pull back leg 2, pull back leg 3. We're trading above support. I'm my stop would be one tick above 25, and I would get stopped out on bar 31. And why I brought up the weekly chart is because bulls didn't make money above the 50% trending behavior. Bulls didn't make money above this 50% pullback leg 2 trending behavior. Bulls made money. Look, they can buy more here, they can buy more here, and they make money on bar 31. Bulls made money. Bulls have outside of this bar within the channel phase, this is the first time bulls are actually making money by averaging in. That's a sign that trading range behavior is coming soon. Because bulls don't make money in a bear trend. And then look, 31, bad follow through. Bulls don't get a second leg. I think this might be a losing trade because if I had taken this trade, I would have been a 50% bull. And the reason I might have I don't know if I would have, but the reason I might have taken it is because we're above support, the gap up. So I don't know, maybe that would have been a losing trade. I didn't take it, but if I did, bears short here, bears short here. I'm assuming bears buy back at the 50% mark, same place where these bulls were looking for leg 2 and a reversal up. Instead, we get stopped out with bar 34. 34 sells off and then has a small leg here. Again, bears are making money below the 50% mark, so I have to think, okay, bulls don't have the upper hand because now bears made money again. Bears can scale in and make money. Bullet in a box, you shoot a bullet in a box, the momentum comes out. Generally the same side, 120 bars. So if this is the bullet in the box, if this is the bullet and this is the box, the momentum would generally come out the same side because it's less than 20 bars. This leg should have to get a second leg down, but it could be climactic. It's the biggest legs with the biggest gaps. There's very big gaps here. And this is a tricky trade. I don't know if I would have held it. There's a gap here, and it's not that big of a gap. It's a breakout gap because it's happening over the higher time frame EMA. Pulled back, 36 and 37 filled me. So bulls that buy here, buy more lower, they get out at 50%. And then the market starts to sell off, but it doesn't retest the low. Instead, bulls get a second, third leg up. I'm counting this. Leg 1, pull back, leg 2, pull back, leg 3. Somewhat of a wedge top into resistance here and here. I don't know what I would do with on this trade because I would ideally have liked to see 41 just tag me like that. If it started to rally, maybe I get out for a small loss here, and I'll take this leg down, and then I get stopped out on 48. So let me show you. This is the trade I'm looking at. Is that right? Yeah. Bulls buy up here, they buy more here. I'm looking to short the 50% mark. Instead it rallies and stops me out. All right, it happens. But look, there's another trade set up. I don't know if I would have got filled. No, I wouldn't have got filled if I put my thing here. So we're in a trading range behavior. We're in a trade. So right here, bulls made money. So that's mean that we're in a trading range. Bulls have now had 3 legs up in a trading range. I don't know if I would have taken this because it depends if I'm in that long or if I'm in that short from this first leg down. But look, bears short the low 42. They don't really it doesn't really come back to their price. They short here and it just starts to rally. So they're pretty much in an immediate losing position. Yeah, that's the high. So bears short the high of 47 because that's the spike. They get out at 50%. And you can see how many bears were trapped because this was a rally, and sold off. So this happened fast. I'm going to the lower time frame. See? It happened fast. So bears got out. They made money. No, excuse me. Bulls made their second leg and it happened too fast. So it sold off. Bears were buying back shorts. Bulls were buying the pullback. It rallied into resistance. There were more sellers sitting under the EMA this time. And it sold off, creating 3 legs down. Or, well, leg 1, pull back. Leg 2, pull back. Leg 3. A little bit of a funny count. There we go. Sells off. There's a bear spike from the high of 49 to the low of 51. We can go for a 50% pullback on that, but we wouldn't get filled. More resistance at the EMA. 3 bars. 3 bull bars into the EMA. Looks like it could get a second leg, but there's a lot of overlap, and we've been and look now. Look how many bars bears have had on the EMA. So if you're looking for that reversal, I think over here it's a little bit better look for a reversal because we're still in a bull regime. We're still above the higher time frame EMA. bulls made money. But if you're looking for a reversal down here to a new high or like back to bar one, I think it's a harder trade because now we have more context breaking out below the EMA. We're not in a bull regime. So yeah, I think it's just this was like around the only time you could look for a reversal. Then after this, it's just shorting or sitting out. Climactic leg down. Leg one, pull back, leg two, pull back, leg three. Now we do see a big gap, 57, 58, 59. Here's that gap. And it's climactic in training range, and there's a lot of bull pressure here. It's a triangle. 50% of the time when triangles break out, the middle can get tested again. You see it broke out, and then the middle gets tested, and we start to go sideways. Bulls get a nice rally at the end of the day here. Sean to get its own second leg. But if you're a 50% pullback trader, that doesn't come. So this is a trade I would miss. If you're a market order trader, you could definitely see this rally. See bears failing 3 times at the EMA. Now we got a wedge bottom on the EMA. This is past bar 72. So if you're trading past bar 72, that's hard. But that's that second leg. Leg one, pullback leg two into the higher time from EMA, and sold off the end of the day. So pretty cool day. Kind of wish I was able to trade, but I just gotta do a couple more things and get into this trade with me class with Ali, and then yeah, I'll be picking up trading. I'm still gonna trade the overnight session, and I'll be just not as much until I get some training stuff done at work, which is pretty annoying. But anyways, you guys have a good one. If you learned something, share a show. Don't be a hoe. Hope you guys had a good, safe 4th of July. Thank you for your time. I'll talk to you tomorrow. Bye.